High Tide has a market capitalization of $353 million and a share price of 58 cents. The stock has increased by more than 500% in the last 6 months and is currently pulling back from all-time highs of 79 cents, hitting February 22nd, making it a great buy in the profound opportunity, particularly with the catalyst in the works. To quench all your curious thoughts, tag along with us till the end. Hello, future billionaires, and welcome to Pennystock Lifestyle. The channel where you get stock inspiration, motivation, and knowledge to become the next future billionaire. High Tide is a cannabis retailer with an emphasis on the production and sale of consumption accessories. With 82 branded retail stores across Ontario, Alberta, Manitoba, and Saskatchewan, the company is the largest recreational cannabis retailer in Canada in terms of sales. Canna Cabana, KushBar, Cannabis Co, Cannabis Supply Co, and NewLeaf Cannabis are among High Tide's retail brands, with more locations planned throughout the region. High Tide has been serving customers for more than a decade through its e-commerce sites grasscity.com, smokecartel.com, and cbdcity.com, as well as its wholesale distribution division, Valiant Distribution, which includes the licensed entertainment merchandise manufacturer Famous Brands. As a parent company, High Tide's strategy is to expand and improve its integrated value chain, while also offering a full customer experience and increasing shareholder value. Afria Inc., TSX AFA, NYSE AFA, and Aurora Cannabis Inc., NYSE ACB, are two major industry investors in High Tide, TSX ACB. Since its inception in 2009, High Tide has grown to become a market leader in cannabis retail, a multinational manufacturer and distributor of consumer products, and the industry's most well-known accessories e-commerce website. In Canada, they have over 701 branded retail cannabis shops, with Grass City being the largest online head shop in the country. The grasscity.com e-commerce digital platform, which is visited by over 20 million people per year, has the most traffic and is the most well-known brand in the industry. Since its launch in May 2020, grasscity.com has amassed a sizable customer base in the United States, as well as a massive social media presence with over 34 million unique users in Grass City forums. We believe the timing of this was ideal, as it took advantage of the global lockdown and enabled customers to access their goods in a seamless manner. As a result, the grasscity.com channel offers a clear competitive advantage, as well as vertical integration and access to Europe. Popular brands are setting new standards for branding in the cannabis industry, and through collaborations with celebrities and entertainment brands like Snoop Dogg, Trailer Park Boys, and the Paramount Features, famous brands are recognized around the world for their cutting-edge smoking goods and proprietary designs. The niche business of designing, wholesaling, and selling accessories globally complement the network of stores throughout Canada. They have been able to consistently achieve superior margins thanks to this combination and track record of execution, and they will continue to create long-term value for shareholders. They announced a rise in sales of over 166% to $83.3 million for the year ended October 31, 2020, in their most recent earnings statement. It's worth noting that this rise excludes the impact of the most recent acquisition, Meta Growth Corp. As a result, once it's completely absorbed, there's plenty of space for growth and synergies. For the year ended October 31st, gross profit rose by 172% to $30.8 million, giving it a gross profit margin of 37%. Geographically, $68 million of the $83 million in sales were raised in Canada, while only $14.3 million were earned in the United States. As a result, just under 20% of revenues were produced in the United States, indicating plenty of room for growth and penetration. This is in line with their growth strategy and vision, which is to strengthen their transformation through organic growth and strategic acquisitions, generating even more value for their shareholders by offering a full range of best-in-class cannabis products and services. The goal is to become the world's leading retail-focused vertically integrated company. So, they have a strong, three-pronged strategy that focuses on differentiation, accretive growth via M&A, and continued R&D to achieve this goal. With the completion of the Metagrowth acquisition, they have nearly doubled their scale in Canada from the end of the fiscal year to October 2020, and they estimate sales in the first fiscal quarter of 2021 to be in the range of $37 to $38 million, up 50% from the fourth quarter of 2020. This is a massive growth trend trajectory for this company. As a result, the company has solidified its leadership position in Canada and is continuing to concentrate on the Ontario region, where they intend to open 30 stores by September 30th, 2021. The Alberta Gaming and Liquor Commission, which is proposing regulatory and legislative changes that will benefit licensed cannabis retailers, is one of the exciting catalysts that could blow up this stock in the coming months. There were also talks about possible investments in Canadian retail stores. Furthermore, the possibility of further liberalization of the federal regulatory and legislative system in the United States will be a big plus for the business. The company is also in talks with a number of parties from around the federally permissible ecosystem in the United States about expanding its activities, and it hopes that its current financial stability will help it to do so. So, while this is an exciting time for this discussion, you should be mindful of the effect of the REIT operation on the cannabis stock sector, which may trigger some uncertainty in short to medium term. When the deal to buy Metagrowth is completed, High Tide will have Canada's largest cannabis distribution network. However, the company has no intentions to slow down, with plans to nearly double its size in the next year and a half. High Tide will acquire all issued and outstanding shares of Metagrowth as part of an agreement announced on Friday, with Raj Grover, President and CEO of High Tide, and his team heading the merged entity. Mark Gallagher, CEO of Meta, and Mike Kosick, CFO of Meta, will stay on throughout the transition. With 63 stores under its banners and an estimated $133 million in annualized sales, the new company will be Canada's largest cannabis distribution network. Canna Cabana was one of the most aggressive players when it came to establishing itself as a nationwide cannabis retail chain, and High Tide owns the Canna Cabana brand. It currently operates 24 locations in Alberta, with 6 more sets to open soon, 7 in Ontario and 2 in Saskatchewan. It also owns a number of KushBar locations in Alberta, which it is in the process of selling. Metagrowth is the parent company of Meta Cannabis, which has 8 locations in Manitoba, 2 in Ontario and 1 in Saskatchewan, and NewLeaf, which has 21 locations in Alberta, plus 2 more opening soon. Grover says there are no plans to eliminate or consolidate any of the banners for the time being, but that Canna Cabana will be the target of potential development. That's partly because it's a higher-end brand, but it's also because Canna Cabana has a history of selling cannabis products before it started selling recreational marijuana, giving it a unique one-stop shop offering in the industry. Grover claims that gaining access to $21 million in combined cash was a major factor in the deal, enabling it to continue with an aggressive growth strategy without having to raise more money, something that has become extremely difficult in the cannabis industry in recent months. Grover also defines the two companies as being very close, which would result in cost synergies of $8 to $9 million in the year following the merger. High Tide's goal is to expand to 115 locations by the end of 2021, with a particular emphasis on the Ontario market, which has become a top priority for many cannabis retailers after the province's government abandoned the lottery system earlier this year. Spiritleaf, a division of Inner Spirit Holdings, opened its 9th Ontario location in July, bringing the total number of locations in the province to 58, and has 17 more in different stages of growth in the province. Canopy Growth's Tokyo Smoke will soon have 20 outlets in Ontario, including corporate-owned stores, licensed third-party stores, and locations that are about to open. The stock has 2 analysts covering it with a buy rating, indicating that Wall Street is very bullish on it. Analysts have set a price target of $1.2, implying a 106% gain in the next 12 months, which may or may not take into account the company's recent acquisitions. As a result, the stock has a lot of space to expand. You should be aware that this stock is an OTC penny stock, which carries a much higher risk and is only available to buy on OTC trading platforms like TD, Ameritrade, E-Trade, or Fidelity. So, just make sure that every trade you make is planned out properly and is within your risk tolerance. This video is not intended to be a buy or sell recommendation. Rather, it is intended to introduce you to some new and exciting companies so that you can do your own analysis and due diligence before making any investment decisions. That's all for today, pals. If you'd like to stay up to date with the best and latest content about stocks and entrepreneurship, then make sure to subscribe to our channel and leave a like on this video. Did you find this video valuable, or do you want to add anything? Make sure to let us know in the comment section down below. We are posting a new video every day with the most undervalued penny stocks in the market right now.